Good morning, everybody. Rob Booker here. Welcome back to our webinars. I'm glad to see you here. Today we're going to talk about exiting bad trades and resolving bad trades and generally have the greatest time of all time. I'm so happy to see so many familiar faces here today. Welcome to the webinar. I'm glad you're here. If you want to make a comment during the webinar, you can put a question inside the questions panel, or you can join us on Slack, and we'll get this thing going. Nice to see you all here. Paval here, Peter's here, Mark's here, Brad's here, Ulrich, Mike Jones, Doug, Steven, Mick says, "Hey, Mr. B." Good morning, everybody. I'm so happy to see you all. Thanks for coming. It's a joy to spend some time with you. I was a little bit sleepy this morning. I don't know about you. I took a lot of time off over the holidays. I hope that you had some relaxing time with your family and friends. I've got a lot to get to, so let's go straight to it. Last night, I took a trade, first trade, discretionary trade since getting back from the holidays, and the first discretionary trade, I think, in 2 weeks. And I shorted the Australian dollar, US dollar right here. And I did it because we were overbought and we were divergent, and it's a typical trade for me. On a variety of time frames, this thing was ready to go. I liked it. The candles turn red when we're overbought on 3 time frames, and then the candles go, well, I'll show you an example later. So when they're overbought on 3 time frames, the candles turn red, plus divergence. I thought, yeah, that's okay. I'm game for that. I'll short this currency pair. And it dropped. It immediately dropped just a little bit. Just a bit right there. And I thought, well, that's great. This is going to go pretty well. It wasn't quite profitable, and then I got a giant candle that spiked upward, and I just closed the trade. I shorted it again when I got a negative candle here, and then I thought, now I'm just chasing this thing. I'm going to get out. I'm going to go to bed. And I lost like, it was not even, it was like 1/10 of 1%. It was, the loss was so small, it was absolutely ridiculous. Now, overnight, I made the right decision. And I don't think I doubted for 1 minute whether I made the right decision when I took that original trade. It's not about whether I thought it was really going to fall. And I think sometimes we get confused about trading, and we think that trading is about staying in if we're right, you know, holding fast on our convictions. Well, with any discretionary trades that I take, and they are very, very rare, I don't care if I'm right. I care about the money. And the number one rule of exiting a bad trade is to make exiting the bad trade about the money, not about being right. And I think there's a lot of confusion here, especially with people that are trying to become a so-called professional trader. And people who are obsessed with like making a decision that a professional trader would make. Listen, a professional trader is only a professional when they stop losing money. And it doesn't matter how you go about doing that. But that's not as important as the next subject that we're going to discuss. So exiting bad trades is all about just getting out at a really small loss. The most successful traders in the world, and what I would call the professional traders, are traders that are going to exit the bad trades very quickly, especially discretionary trades. I don't think that works for robotic trading. I think if you close your bad trades really quickly with a robot, you're going to have like 1 million small losses. But the next question is, what about resolving a bad trade that you've kept open, whether by mistake or intentionally? Now, if we go over here to my robot account, I got a lot of stuff I want to show you today. My robot account is just banging out wins, and it's basically making an annualized monthly return of about 4%. And I'm going to be up to about $200 a day very soon in January because I'm finally ready to increase my trade size, which we will do together tomorrow. And you will watch me walk through each of these financial instruments and increase my trade size on those financial instruments. But I'm holding losses in this account. Now, this is a reasonably large trading account, but I'm holding a loss. I'm not going to get into this because we've talked about it before, but the price of running a robot, in my opinion, is understanding the robot's weaknesses. And the robot's weakness when I run this robot, which is called the Finch, the robot's weakness is it holds on to and will hold a losing trade until it is resolved. And that means that I will be holding on an ongoing basis some losses. That's not going to freak me out. I'm not going to get worried about it. I'm not going to freak out. I'm not going to jump up and down and stomp my feet and cry and complain. It's just like having a line of credit in a business. And I draw on that line of credit, and I'm going to have a small amount of debt as I have inventory or profits or whatever else. It's just the way it is. However, I am going to want to get out of these bad trades. I am going to desire to pay down that debt at some point. And what point is that at? When do I start being concerned about it? Well, I would say when a loss reaches something around 2 to 3% of my entire account balance, I start to look at the charts and make some decisions about how I'm going to get out of that loss and how I'm going to resolve it. And you've been in this position as well, and many of you have asked me, well, how do I go about getting out of a bad trade? What do I do? When do I even start thinking about getting out of a bad trade? Well, I wouldn't even consider it until your loss reaches those numbers, 2 to 3% of your total account balance. And even at that level, I would consider still not doing anything. Too many traders are too interested in getting involved in their bad trades too quickly. And I think we don't allow things to go wrong, or we just don't allow things to just resolve themselves. And many times in the world of trading, things will resolve themselves. The number one candidate for this conversation, because many of you over the last, I would say, 60 days have found yourself in a Japanese yen related trade that isn't doing well. All right, I'm going to take a little drink of green tea here, and I'll be right back. So let's say that you are in a dollar yen, pound yen, Aussie yen, New Zealand yen, Klingon Darsek yen trade, and you know likey that trade. What I would do at that moment is I would look for long-term levels of support and resistance to be hit, and then I would look for places where I could take a trade. Now, I've talked about this before, and if you go to robbooker.com and you click on bad trades, you can see a blog post about bad trades. You could also look on my blog. I got another. Yeah, that's actually a really good. That's a good one there. I've got another post that you can look at, but I'm going to summarize it right here. You could get on your charts an indicator that will show you on a weekly chart a pin bar. And a pin bar is a candle, roughly speaking, with a small body and a long shadow, or what many people call a wick. And that's an example of one right down here at the bottom, this red candle with a long wick and a small body. And I would, on the weekly chart, wait for the dollar yen to hit a long-term level of support or resistance. This would be old support, which is now going to be resistance, and create a pin bar of some kind. And then I would look for a reversal. And I would take a trade at the moment that I saw those two things. A pin bar and hitting long-term support and resistance. Then I would take another trade and add it to my other trades in the robot account. And I would take a trade that is slightly larger than the other trades in my robot account. And then I would close all the trades when those trades went profitable. Now, this happened to me just a couple of days ago, a few days ago. I was in a Canadian dollar Swiss franc trade. I was in a 0.27 lot trade and a 0.09 lot trade that had gone badly. I added a 0.31 lot trade for no good reason, was 0.31, and I added that trade when I noticed a pattern on a longer term chart, and then I just put a hard profit target in there that I knew would be a profit target that would exit everything either at break even or a little bit of profit. Now, I didn't just give you the secrets of the universe. I didn't just tell you the exact way that you should handle every single bad situation. But what I did was I at least told you this is a general principle or a general technique for getting out of a bad trade. It summarizes the main points. And you got your main points now. Now you're going to have to do some of the work on your own. You can't ask someone else to, like resolve all your problems in life. You can't do that. I can't fix all your bad trades, but you can look at these principles here and you can use them to help you out. So I'm in a bad British pound Australian dollar trade. And I'm still waiting for this stupid currency pair to go higher on these weekly charts. I'm still waiting for this. I want it to get up into this area if it can before I take a trade, or maybe all the way up to the yearly pivot and print a pin bar. And until that happens, I'm not very interested in taking another trade. But let's go to some longer term, but not super longer term charts and take a look. Now, if I didn't want to wait on the weekly chart, and I was willing to be what I would say a little bit riskier about the way that I did this, I could pull up a 4-hour chart and I could wait for a few things. I could wait on a 4-hour chart for 3 time frames to be overbought. I could wait on a longer term chart for, say, the candles on the chart to move away from a 200 period simple moving average for an extended length of time until things get ridiculously overbought or overextended. I could wait for those things. I could wait on a 4-hour chart and I'm going to pull up the weekly pivots. I always color my weekly pivots dark green. So I could wait on a longer term chart for multiple weekly pivots to be missed as price travels upward. And as you can see here, not one weekly pivot has been missed. This pivot's hit, this pivot's hit, this pivot's hit, and so forth. See who wrote me. Yeah, that's Joel. Good morning, Joel. So I can't see any missed weekly pivots on the British pound Australian dollar. I could look for multiple monthly pivots to be missed. Well, there's one monthly pivot missed right here, but that's not multiple. So it's really not a candidate for what I just discussed. It's really not ready. And so until these things happen, the pin bar on the weekly chart or multiple missed weekly pivots on a 4-hour chart or multiple monthly missed pivots, I can't get involved in this trade. And what I notice many times is friends of ours here will get involved in a trade way too early before multiple super important conditions are met. If I'm in a bad trade that's gone against me a long way, I have to wait for something extraordinary before I can work my way out of that trade. Now I'm going to take some questions this morning, but first I want to show you what I'm up to. I'm running the robot on the US dollar South African rand. I like this currency pair. And I'm running it with the Finch robot with some interesting settings. I'm only going for $1 in profits, and I'm trading with a lot size of 0.2 and 0.6, and I'm waiting 270 pips for my second trade. If you don't know anything about the robots, you should go to my blog and click on robots, all right? I think that I want to run this now on the US dollar Mexican peso as well, another exotic. So I'm going to save this template, exotic Finch, sounds like a bird. And I'm going to use these exact same settings on the US dollar Mexican peso by putting that template on the US dollar Mexican peso on the 1-minute chart. And there it is. And now every time the 1-minute chart shows bearish divergence, which I would have liked to have seen earlier today, this will take a trade. I might go for 190 on the max spread. I don't know. I make a lot of stuff up. All right. So now I'm running the robot on the US dollar Mexican peso as well. I want to be able to see this, so I'm going to move this MetaTrader chart all the way to the front row next to the South African Rand. I might even put it in front of the Rand for a little while. Okay. It's time for some questions. Let's see what anybody's asking. Morning, Rob. Happy New Year from Andy. Henry said that. Andy bought gold. Mark can't hear me. All right, well. Tony says the problem with holding bad robot trades is lost opportunities on the same pair and possibly swap fees. Well, I found in the long history of robot trading, Tony, with many people, that the swap fees don't matter unless you're trading an exotic currency pair, in which case you only trade that exotic currency pair in the direction of positive swap. So on the US dollar Mexican peso, we will only take sell trades. But for all the other currency pairs, that doesn't really matter. As far as lost opportunities is concerned, you can always open up a sub account when you get stuck, and then you can actually trade in that sub account the same currency pair, start over from the beginning. Or if you live outside the United States, you could just change the magic number and trade that same currency pair. All right, some people are asking how to join Slack with the community. You need to be a lifetime member, and you can click on a link in one of my emails if you want to do that. All right, if using a robot, says Hugh, and in the long term it's profitable, can you just take the loss and move on? Yeah, that's another option. It's always an option. Okay, let's go back over to the charts here. Let's take a look at a bunch of financial instruments. Let's take a look at the 15-minute charts. I'm going to hide the pivots. They're not necessary today for what we're going to look at. Let's run down through a bunch of financial instruments and see if anything is overextended. Okay, the US dollar Japanese yen appears to be somewhat overextended. You can see here that there are multiple time frames that are overbought, 3 time frames simultaneously every time that this turns red. That means that the 1 minute, the 5 minute, and the 15-minute time frame charts are overbought. If you get the indicators on tradingview.com, you will automatically get this indicator starting this week. Andrew Palladino and I are working together, and so all of Andrew's indicators are coming into my TradingView package. All right, that's number one. I haven't seen enough overbought conditions yet on the US dollar Japanese yen to really get involved. Oh, look at this Australian dollar Canadian dollar. Right here, when you see these green lines running through the chart, that means at this moment in time down here that 5 time frames were oversold at the same time on the Australian dollar Canadian dollar. That would have been a really nice time for a buy trade. I think I'm stuck in an Australian dollar Canadian dollar trade. I am. Gosh darn it. That would have been a perfect time to buy the Australian dollar Canadian dollar. There's the Australian dollar Japanese yen. You can see this thing just screaming upward right now. And it looks like at some point in the near future, the Australian dollar Japanese yen is going to be a pretty nice trade. Here's the Australian dollar New Zealand dollar. Okay, the Australian dollar is crazy right now. Look at this Australian dollar Swiss franc. I'd like to take a little sell trade here. Could we do that together? Let's see what it looks like on the 1 minute chart. That looks kind of nice. And then we'll just do a really, really simple profit target. If we sold it at 74.37, let's do something easy to hit, 74.30. Okay, that's a little bit even too much, but we'll leave it there for now in case something really starts roaring, ripping downward. Now, if it goes up a little bit, I'm not as concerned about that. What I'm concerned about is if it breaks through this high right here. Using the principles of having that conversation that we just had a minute ago, what I'm interested in is getting out pretty quickly if it jumps up against me, because this is a discretionary trade and I have no intent I have no intention of holding a discretionary trade overnight. I like this because it's screaming upward. It's bearish divergent, and it's been overbought on 3 time frames simultaneously. I love that. I love that combination right there. Just this giant sharp movement upwards. Things that move upward that fast must correct at some point. They must come down at some point. Not immediately necessarily, but they're most likely going to have a little bit of a reversal. This is a good one too. The Australian dollar, New Zealand dollar. That one looks really nice too. And if we're wrong, we take a really small loss. If we're right, that's great. But if we're wrong, it's not that big of a deal, right? We're not gonna panic if we're wrong. We're not gonna freak out or whatever. We've even broken a little trend line here on the 1-minute chart. I like that. We'll give this one a chance. We'll give this one a chance to succeed. We don't need huge wins every day. We just need reasonable sized wins over and over again. Here's the Canadian dollar, Swiss franc. Here's the Canadian dollar, Japanese yen. Now this is interesting. The Canadian dollar, Japanese yen is now overbought on 3 time frames simultaneously. And 5 time frames simultaneously. The 1, the 5, the 15, the 60, and the 240. Those are some pretty awesome conditions for a sell trade. So I would love to sell this below a solid level here down to a trend line. Love that. And I think all of the yen pairs are just kind of out of control. Australian dollar, Swiss franc is falling quite nicely. Let's take a look at our trade. Yeah, good. We're doing all right here. Don't need to make a lot of money here. We're not trying to get rich on a single trade. We can wait for the trade to go profitable and then move the stop loss to break even. But if it moves against us and jumps up above the highs, we'll just give up on this trade and we'll just let it go and walk away and go to the next trade. David says, why don't you develop a recovery expert advisor? Well, I don't know, because the robot's doing so well, I don't have to worry about it. I try not to. Let's go back to a principle. That's a great question. So this book has changed my trading in my life. The one thing, the surprisingly simple truth behind extraordinary results. Basically, the answer to that question, David, is by running the Finch, almost everything else that I do or used to do is unnecessary or made easier. By running the Finch robot, I don't need to run a recovery EA, essentially. I mean, it's an unsatisfying answer. But the answer really is I try to do as little as possible to get in the way of what is working. And by running a recovery EA, what I would be doing is essentially trying too hard to get out of a bad trade. And a bad trade isn't as bad as it sounds, is what I'm saying. It's not as bad as it sounds. It's all part of the circle of life, basically. And so I don't want to run a recovery EA because I'm not good at that. I'm not good at building it or whatever. I'm just good at, when a bad trade is on the British pound Australian dollar, identifying some things that I would be interested in. And they could be one of 3 or 4 different things. Not really a robot scenario. So I don't run a robot. I just watch the charts, and everything seems to just always work out just fine. The euro Australian dollar is out of control because it's Australian dollar related. This is ridiculous. The Australian dollar is also on the euro Australian dollar. It's reaching some level down here of old support from a long time ago right here. This is ready for a reversal. Yeah, that's a nice trade too. A little buy trade earlier this morning on this looks nice as well. It wasn't overbought on 3 time frames simultaneously, so I'm not as interested in that. but I like that trade for a buy. The Euro Swiss, wonderful currency pair. Euro Pound, nothing going on. Euro Canadian, nothing going on. Someone asked about the Euro Canadian. I don't have any really strong opinions about it. It's basically in a sideways pattern on the longer term charts. So I don't really have anything to say about this currency pair right now. Euro Yen, nothing really to say about that. Euro New Zealand, nothing to say about that. Euro Turkish Lira, nothing to say about that. Euro Dollar. Someone asked me about the Euro Dollar. Nothing to really say about that. I have a lot of support and resistance drawn on this chart, and we are reaching deep, deep levels of support down here. I mean, this is the kind of thing that a financial instrument does right before it just rips in the opposite direction. If I were looking for a reversal in the US dollar, now would be, in terms, like longer term sense, like over the course of the next month, now would be the time to start looking at something like that. One of those types of reversals. All right. Yeah, let's take a look at the British pound, Japanese yen. So this is also has reached old levels of resistance as well. I mean, we could look at it right here. I was looking at this on the weekly chart today. I'm still waiting for this to get all the way up to this year's pivot, the New Year's pivot, before I look to see if this will fall lower. John says, did you see the Andrew Palladino indicators now come as part of my indicator subscription on TradingView? Yes, not a pro subscription on TradingView. It's part of my indicator package on TradingView. It's now my indicator with Andrew Palladino package. We share that together. Because, yeah, it's a long story. I'm not going to get into it. But yeah, Andrew Palladino and I are buddies, and he's got some great indicators. Ken says, are you still looking to modify Finch to add Murray candles to get into the trade? Well, we did that a long time ago, and no, I'm not looking to do that. A lot of you have asked me this question recently, and I love it. You've said, hey, Rob, what if you did the following with the Finch? And my answer is, I don't care. And I love you, but I don't care. I am not looking to modify the Finch in any way except for this particular way. Increase my trade size. That's it. If you can remember the one thing, stop looking for something new or different and just do the one thing that makes the most, right now, that makes the most sense. And that is, for me, running this robot and increasing my trade size and making more money. Nothing works better than that. All right, how can you achieve 40% without using discretionary trades when the robots get into trouble? Oh, I think that you would need to trade maybe 5 times a year no matter what robot you're running. All right, this has been a lot of fun. Let's just look at the stock market and gold and Bitcoin and oil. Stock market has finally, I think, reached preposterous levels, and it's starting to miss weekly pivots as it falls. This is what a financial instrument does when it reverses course. Down here at the bottom, you can see a pin bar, and you can see a missed weekly pivot. It all starts with a missed weekly or daily pivot. And we've got one. We missed last week's pivot on the S&P 500. Now's the time. It is now time to start looking at possible reversals in the S&P 500. Bitcoin is literally out of control. And we talked about this. It is on a rip-roaring run. Multi-year run, probably up to 10,000. I know that sounds insane, but that's probably what's happening. The Australia 200 has probably got more room to move upward, but I'm not seeing anything exceptional here at all, except for there's a yearly pivot below where we are right now. And until we start missing pivots on the way down, I don't think the uptrend will stop. Gold has finally hit last year's pivot again. It has this year's pivot that it needs to hit. On a weekly chart, before I took a really long-term trade, I would be looking for some kind of a pin bar situation, but we did miss last week's pivot. It means possibly gold is ready for a move upward. Oil hit 55. That was my number. It hit $55. Let's see if we can reverse here. And until we have a pin bar or hit a really super long-term area of support or resistance, I don't see this turning around either. All right. Greg says, if you double your lot size on Finch, wouldn't you be doubling the running loss? No, I mean, the running loss is just open trades, Greg. You can't go back in a time machine and increase the trade size for trades that were already taken. So no, the current losses stay exactly the same as they are. They're not. You can't. If you increase the trade size on the trades, you're not going back in time and increasing the size of the trade that you already took. The loss will just be the same. Yeah, going forward, any losses would be larger. Yeah. I'm not afraid of losses. I think we need to clear this up. That's a good question, Greg. Sorry I misunderstood it the first time. I'm not afraid of losses. We are so far beyond that question now that it almost seems like we're living in the past when we talk about it. There is, let me just describe this and we'll finish up and we'll come back tomorrow. There is a new thing going on. And if you can wrap your head around it, your life is going to change. The world has changed and trading has changed, and if you're living in the past, here's what you're doing. You're still looking for a system where you can trade discretionary trades, and you can basically cheat death by ignoring the fact that you've been impulsive, and every once in a while you get yourself into a giant losing trade, and all of your gains are gone, and all of your hard work is thrown out the window. Or you can say, I want to make some money every day and run a robot, and I am willing to accept X percentage of drawdown. And Greg, for that for me is like 15%, because I know that loss comes back. I know that comes back around, Greg. So I don't give a shiz about it. I don't care about it. In the same way that if you run a laundromat and you have to borrow $100,000 to start your laundromat, but the laundromat makes $100,000 a year, you don't care. And someone says, oh my gosh, are you opening another laundromat? And you go, yeah. And they go, well, that means your debt's going to double to $200,000. And you're like, are you living in some bizarro world where you don't look at the whole picture? So Greg, your question is extraordinarily good, but it's a question asked by someone who has thought about trading in the same way for so many years, just like all of us did. We're in a different era now, and what we're doing now is we're trading for daily gains on a robot that tends to come back over time, and then we each accept or choose to accept a total drawdown of X percentage, and then you can increase your trade size up to the point where your losing trades are eventually going to be in that kind of a drawdown. And then eventually, Greg, those trades all come back anyway. Then it's just like having a line of credit in a business. And you stop thinking about trading in terms of, there's an open loss, I'm going to die. And you realize that it's part of it's part of the deal. And it's no longer a big deal anymore. And then basically you are set free. You're basically set free. And the chase is over, the run is over, all the sadness is over, all the looking for the answer is over, and you realize that it's just like running a business. You bring in profits every day, and you pay down your debt. And over time, your debt goes away with profits that your business runs, and everything works out just fine, and it's lovely. All right, Steve says, would you use Plutus over the Finch if you could? No, and Scott Haywood wouldn't either. Scott Haywood doesn't even do as much hedging as he used to do anymore. All right. Phil says, how do you trade with the robot? You go to robbooker.com, click on robots. Greg, I loved your question today. Thank you. Mike says, I have an absolute stop of 5% on my account on Finch. Would you say this is too high if my wins are only blah, blah, blah? Mike, you're using a stop, so I can't even answer the question. You're using a stop. I can't answer your question. I would never use a stop with the Finch robot, ever. So I can't even answer the question. What I would do, Mike, is reduce my trade size, not have a stop, and then work, 5 times a year when your trade gets into a loss that's 3%, work with your friends inside the chat room or somewhere, or me or whatever, to take an extra trade and get those ones out of trouble, and then just move on. Chris says you trade the Finch on the 1 hour. No, the 1 minute. All right. Mike says I can't have a loser go on forever. Oh, okay. Well then, Mike, I don't. Mike, we're just not a fit. I mean, yes, you can have a loser go on for. Why? Yes, you can. I mean, I don't understand. Mike, send me a text message. You know how to get in touch with me. Rule number 1 is not to have a big loss. Yes, Mike. So reduce your trade size so it's not a big loss. Why are we Mike, I love you. I'm not mad at you. But Mike, why are we having this conversation? Number 1, reduce your trade size. Number 2, let it go. Let it go. Surrender. Let it go. Stop trying to wrap your greedy little fingers around a loss. Stop trying to control it. Stop trying to never let anything bad happen to you. Stop that. I'm not mad at you, Mike. I'm just ranting. Stop doing that. Reduce your trade size and let it alone. Stop trying to never let a bad thing happen to you. It's like what you're doing is like saying, I'm never going to let my kid out of my sight and my child's going to wear a leash. And then you grow up and your child wants to live with you until they're 55 years old. Stop. Stop doing that. Reduce your trade size or reduce the number of currency pairs you trade, and it's not going to go past 5% or whatever. And if it does, you get involved and you work out a problem and you face the problem. Then you have to confront the problem. Having a 5% loss rule on the Finch, all that's going to do is make money, then give it all back, make money, then give it all back. That's all it's going to do, unless you can prove otherwise in backtesting. But if you just reduce your trade size and you let it go, and if you can't let it go, then you reduce your trade size and you reduce the number of currency pairs that you've traded until you're down to making $1 a day and you're feeling absolutely comfortable, and then you jump it up to $2 a day. And then you jump it up to $3 a day until you're up into the $20, $30, $40, $50, $100 a day, and you're comfortable and you've eased into this. I'm not asking you to jump into a trading situation where you could be down 20%. I'm asking you to jump in slowly and watch something get into trouble when the trouble is so small that it's not even a percent. And it's horrendous in pips numbers, but it's not that bad in terms of a percentage of your account. And then you learn to face your problems, and you learn to face the difficult trades, and you learn to let something bad happen in your trading account. And it's what I said earlier. You learn at some point that you can't build a system that has an automatic fail switch where nothing bad ever happens to you. You can't build that system. It doesn't exist. But you can let go of the need to have no bad thing happen in your trading account and reduce your trade size so that it doesn't get horrendous, and then work your way out of trouble. And that takes time and practice. And there's no substitute for that. You can have a fail-safe switch on your trading account in other types of trading, like discretionary trading, Mike. You can, like I just said with the Australian dollar Swiss franc, you could do that with that currency pair in a discretionary trade. But otherwise, I just say, let it go. I'm going to close this one on the Australian dollar Swiss franc. We'll come back tomorrow. That was much longer than usual. I hope you enjoyed it. We'll see you tomorrow, everybody. I love you all.